minutes ago with their August crop report. And we're going to talk about that this morning in terms of what the highlights are. I haven't had a chance to pour through the report yet. We're going to highlight what the USDA is talking about in terms of crop size. Crop size for corn, soybeans, talk about the carryout prospects, not one for old crop, but also this new crop we're going to look at here. As it relates to your business and relates to what you folks are most interested in, what we're going to highlight first then, after we highlight the report, is what we see as more of a regional trend this year in terms of production potential and regional trends in terms of storage capacity, storage issues. Last year, a lot of storage took place on the ground, right, with our record crops, especially across Illinois, Indiana, Missouri, parts of Iowa, parts of the central Midwest. This year it looks a little different. We're going to talk about that. Because of all the rain we saw, right, last month especially, really has changed that picture a little bit. Then we're going to wrap things up this morning, talk a little bit about what we see in terms of fundamental outlook. Fundamentals being supply, demand, not only for this old crop year we're wrapping up, but now for this new crop we're getting ready to harvest. So again, report recap, kind of a storage picture, and then more of a S&D overview. A couple tidbits I'll share for you up front is that there's a tremendous amount of uncertainty surrounding this crop, particularly here in the heart of the Midwest, Illinois, Indiana, Ohio, Missouri. There's not so much uncertainty about the crops in the northern part of the Midwest other than how big it is. Talking about Minnesota, talking about Wisconsin, talking about Iowa. So there's some divergencies there. What we could see develop quite a bit this year in 2015 is volatility in cash markets, whether it's basis, whether it's freight, whether it's basically anything that has to do with movement of grain across one region to another, okay? Rail, barge. The export picture we're going to highlight this morning looks a little bit different than last year too. So I just want to plant those seeds, if you will, before I get started here, because I think this year could see a lot of things we don't typically see in terms perhaps of movement of grain from west to east, for example. So let's get started. Excuse me. Again, supply-demand highlights, storage space, and fundamental trends. This report is hot off the press, if you will, this morning. I don't know if the lights, can everybody see that in the back, or can we work with the lights at all? I don't want to make it taping any inconvenience for anybody, but basically these numbers just came out again about 45 minutes ago. This is our summary. USDA came out with a crop size above expectations, okay? Above expectations. I think the yield was over 168. I literally was filling out this chart as I left the office here. But the important point is, average of guesses was 13.3 billion bushels. It came in about 450 million bushels above that, okay? Now, that surprised the trade. When I left the office, the corn marker was down about 20 cents. It had been down closer to 30, 25 to 30. So a bearish reaction. Soybean crop. Expectations were 3,742. The crop is 3,916. So 175 million bushels above expectations. So negative reaction, beans were down about 55 cents when I left the office. What I'll share with you is this. USDA historically puts the August crop report out there. They do a terrific job, but there's room for change in that number. I went back and did some research. For example, the corn yield historically from the August report to the final USDA report, okay? If we go back maybe, I want to say I went back and looked over the last 20 years. In years where the final report or the final yield was higher, the increase was about 5 bushels, closer to 5.5 bushels, okay? Now in years when the final yield was lower than the August report, it was about 5 bushels. It was like 5.1, not quite as high as what it was in the increase. My point is this. The August report in some years is pretty close. In other years, there's room for change, higher or lower, okay? And this is a year particularly where the market's going to be very keen to what results are from your growers. Are the results going to match up with today's numbers? Are they going to surpass those numbers? Or are they going to fall short? So just plant that seed. With the same example with beans, it's been about 2 bushels higher to 2 bushels lower. So again, room for change and room for adjustment in not only production, but also funnel down into carryout, okay? USDA came out this morning and said the carryout for beans for 15-16, excuse excuse me, the crop, pardon me, the crop we're getting ready to harvest, 470 million bushel. The average guess was 322, so beans again down 55 cents. Corn, 1713, 1449, corn down 20 cents. So now again, that carryout number is not carved in stone either, via changes in production, via changes in demand. So we've got a mark on the wall now, starting this 2015 production estimate season, I'll call it. A lot of private tours are going on now. A lot of private tours. I'm going to participate in one this week. We're going to have others sprinkling up. I believe the Pro Farmer Tour is next week. Anybody know anybody involved with the Pro Farmer Tour? I know that's a big tour that starts over in Ohio and works its way east, or west, excuse me. And actually I have a crew that starts out in, I believe, Nebraska and works its way eastward. That'll be closely followed. But this is a year, I think, where the market's going to be very tuned to see if these yields match up with what USDA told us today. Will they match those yields? Will they be higher or will they be lower? And all we can tell you today is that there's history on both sides. There's history to say we can see that number increase quite a bit, and there's history to say we can see it decrease quite a bit. I will share with you this, that last year, if I'd have been at this meeting at this time, what I could have told you was the perception was, how big is this crop going to be? Generally, all across the Midwest, with some exceptions. The exception that comes to mind was southern Minnesota did not have a record crop last year, unfortunately for them. But nearly every other core state, Illinois, Missouri, Indiana, Iowa was just a smidgen below last year, but all those other states had record yields. How big was big? This year, we don't know. And I'm going to highlight that in just a few minutes for you. But what I'll share with you on this is also true is that this carryout number is not only just a function of what happens here in the U.S., but more so today than ever, it's a function of what's going on in the rest of the world. If you woke up the last 2 days and you saw what the stock market did, you say, what in the world's going on? The stock market's down hard again today. China has devalued their currency. What happens now in China? What happens now in South America? What happens now in the Black Sea region? What happens in Europe? Pretty much what happens everywhere around the world now impacts your markets. And that holds true for corn and beans too, where these numbers can be influenced by, for example, the size of the crops that they're getting ready to harvest in a few months or a month or two in Ukraine, Russia, Europe, China. It'll be influenced by economic policies in China. What happens with the situation in the Black Sea region with, obviously, it is an ancient history now, but with the whole Crimea situation, Ukraine. My point is this. South America is just getting ready to start planting their crops, so we enter another weather season. So a lot of ingredients in the pot, if you will, for volatility in the markets, uncertainty in the markets. So this is a starting point. The market's interpreted it bearishly today. Who knows what it's going to look like 3 months from today, much less 6 months or 9 months down the road. All right, let's talk a little bit about storage space. Very important when we look at this 15 season. What we do each year is we take USDA storage capacity totals, and that includes commercial space and on-farm space. We utilize those numbers along with production forecasts, corn, beans, milo, as well as stock forecasts for wheat, okay, on September 1st. And what we do is we put all that information together and say, what does it mean in terms of storage space availability for an individual state, okay, because we have individual state data for all those components. For example, when we look at the state of Illinois, what we did was back on June the 4th, okay, we said based on USDA's estimate of crop size, or pardon me, USDA's estimate of storage capacity and our internal estimates of crop size, that in Illinois for 2015 we were going to have 31 million bushels more space than we did a year ago, okay? The best way to look at that is to say that if we were short space 100 million bushels last year, we would be short 69 million bushels space this year. Does everybody follow kind of where I'm going with that? Here's the interesting thing. When we did this exercise for Minnesota and Iowa, okay, on June 4th, these areas were forecast to be a lot tighter than a year ago. A lot tighter than a year ago. The reason being is all this area north of I-80, okay, in Iowa, moving up northward into southern Minnesota, did not have record yields last year. But when you pencil in a rebound in yields this year, okay, then you look at a much tighter situation. And we'll do this exercise again when we get back to the office with USDA's yields for today. But Missouri had a tremendous crop last year, so if they, when we look at it again, early June, come back down to normal yield, much more space in Missouri, but pretty much unchanged space. Illinois, Indiana, Ohio. Put a mark on that in your mind. What we saw, as we all know, from mid-June to mid-July was something in my lifetime, I'd never seen before. This is the National Weather Service chart showing the 30-day summary of rainfall from mid-June to mid-July, i.e. percentage above normal, below normal. Now the darker blue areas, the purple areas, okay, 200% of normal, 300% of normal, and higher, okay? The lighter colored areas, 50%, 75%, 90%, whatever it may be. I've used this chart all summer, and there's no better way to show it other than to say, if you take a line from the southeast tip of Kansas and go northeast all the way up and pretty much in that southeast corner of Michigan, anybody to the east of that line got way too much rain. And anybody to the north of that line is pretty much normal, or maybe even a tad dry, okay? And this is really what changed the market's perception in that mid-June to mid-July time slot, okay? Strictly is, I did a meeting down in Columbia, Missouri, near Columbia, Missouri, at the end of June, and I stood before an audience of about this size, maybe a little bigger, and I said, how many of you folks, or the moderator actually asked, how many of you folks have not planted any crops yet, any soybeans? And about half the crowd raised their hand. Literally couldn't plant. Now, in Illinois, we did get most of our crops in. Some of them had to plant again, replant, but at least they got in. Now, with this picture in mind, in terms of fundamentals, we go forward and we say, how's that change of storage space? This is where we were, 31 million bushels more in Illinois, 18 in Indiana, 11 tighter in Ohio. We did this again last week. Look at the excess capacity now, 350 more space in Illinois, higher in Indiana, higher in Ohio. Are these numbers carved in stone? No way. We're going to have to find out what this corn yield is, what this bean yield is, and go from there. But given what we know today, it certainly doesn't look as tight as it did a year ago. So how does that really bring it back to the harvest merchandising question? What are some things that may play into this? I was fortunate enough to be invited about a month ago to go to South Carolina to speak to a group down there. And basically what I told them is, obviously the Southeast has a tremendous amount of hogs, turkeys, broilers, particularly North Carolina. That's an area that pulls corn from the Midwest, right? They do not have enough corn domestic or locally there to make it. What's interesting, what could result in some cash market trends and cash market volatility is the areas they typically pull from, for example, might be Ohio, Indiana, maybe even as far as Illinois, moving corn to the southeast. Well, we don't have as much as we did a year ago. At least right now we don't think we do, okay? We're feeling more and more confident as we get closer to harvest. My point is this. As you look at the southeast pulling on that corn, we may see a situation develop where there simply isn't enough supply here to meet that, so we have to draw on this corn maybe up in Minnesota or Iowa. Maybe it's more of a situation where Minnesota and Iowa corn, okay, works its way down into Illinois, and Illinois corn does end up going down into the southeast. but you can see the potential for some movements here, some movement of corn from west to east. That's not something that's easily done. It can be done, but that's something that could result in a lot of swings in the cost of freight, in basis trends. A lot of volatility there. Kind of an uncharted water here in many ways, but something to keep in mind in terms of what we may be looking at in harvest time, in terms of what also, how that might impact freight availability, this and that. I'll just plant that seed and ask you to think about how this year might be different from last year. It certainly feels like it could be a lot different. Fundamentals. What's going on? The USDA comes out every Monday with their crop condition report. Everybody waits that report, 3 o'clock. What we did with this slide is, let's develop an index based on those ratings, excellent, good, fair, and poor. Let's compare this year with other years. Whoops, went too ahead of myself. Last year's is the orange line. Last year's crop started with high ratings. It stayed good all summer. It was the best crop, generally speaking, we'd ever seen. That's the orange line, okay? Contrast that with the purple line. The purple line actually had to put on a separate axis because the ratings were so low, but the direction of the drought was clear. The crop never had much of a chance past the 1st of June. Got worse and worse. Where are we this year? This year's the black line, okay? Initially, we start out some pretty high ratings. We deteriorated the crop, at least USDA said, with that excess rain we just talked about, into the end of June. Then it stabilized, and it's just crept a little higher here the last month. That's been enough to weigh on the market in terms of flat price of December corn, for example. Price of December corn reached a low, or it actually rebounded all the way back up to over $4.50 a bushel, but it went down to about $3.60 a bushel, right in here, okay? And then actually mid-June, right here, $3.60 a bushel, and as it deteriorated, the market rallied, and we'll see that in a second, how quickly things change. Rallied all the way up to $4.50, now it's coming all the way back down. It's about where it was back in mid-June now, all the way back down. But the perception now is the crop is stabilized. Crop condition ratings from this point forward aren't near as important as what we see in terms of the last half of August, what kind of test weight we'll get, what kind of fill we'll get for the year. For beans especially, August weather is still a big deal. And August weather is still important, even in September for corn if you're talking about early frost. My point is this, the perception is the market, the crop is stabilized. May not be a perfect crop. It may not be as good as 14. We're not too far behind if you believe the USDA today. But it definitely isn't deteriorating any further. All right. What's going on around the world? What's going on around the world? Just a couple of bullet points. Divergent crop prospects for the U.S. We already talked about that. Record production in South America. When corn went to $8 a bushel a couple of years ago, we really saw the South Americans, in particular Brazil, respond. Record corn production in Brazil this year. And record exports forecast, okay? Tremendous competition now from an area we always thought about in the past as being soybeans, Brazil. But this year, in the last couple of years, corn has been a big deal. But contrast that, they got a drought going on, at least very hot, dry conditions in parts of Europe, particularly France. So their crop is going to be smaller than last year. Black Sea exports, that includes Russia, Ukraine, are still high, but they're down from the last couple of years. And we got all this uncertainty now about China. The corn use is still projected to be record high, but now there's economic questions. The whole idea of, is the Chinese economy finally on a down, or at least a cool down phase here? Everything's relative. The Chinese GDP growth I just saw this week in the news that people are talking about is 7%, okay, annually. For a while it had been 9, 10% per year. Of course, in the U.S. we're kind of struggling here with 2% or so. But that's enough to kind of cool the market a little bit. And the whole issue of China could be a wild card to keep an eye on. I know the balance sheet can kind of just, is he going to go through all those numbers? No, I'm not going to do that to you. All I'm going to do is kind of highlight a couple things. Exports in corn. USDA's at 185. We're a tad lower than that. We're a tad lower for next year. The thing I'll share with you on exports that may impact in terms of what's going on in your business, what's going on and the folks you work with is the export picture for today doesn't look as strong as it did a year ago, okay? And that's depicted by how many sales we have on the books, okay? What this chart shows is the new crop book is the red bar, the old crop, what's left on the books for old crops, the blue bar, okay? And we kind of stack those together. If you look at this chart, look how weak our sales have been so far for new crop corn, okay? That new crop corn book, you have to go all the way back here to 2006 to see it be that low, okay? And you have to go back to 2005 to see the combined book as low as it is this year. What's that a function of? A couple things, I think. Competition from South America, competition from Brazil. I think maybe some of those users overseas bought early last year, and then they watched the price go all the way down to under $3 cash corn. We all remember last fall at harvest, under $3 cash corn. And they said, I'm not going to make that mistake again. This yield blew the roof off last year. And basically what they saw this morning maybe makes them feel even better, that patience is a virtue in this case. Point being, though, is that when you look at how that correlates with what we could see an export program this fall, it's not a great correlation, but it just gives us an indication that maybe our export program for corn this fall is not going to be as strong as it was a year ago, okay? Things can change. We still got a few weeks left to go before the start of the first quarter, September, October, November. But how that's going to impact maybe demand for barge freight, okay? When you're looking at the lack of a program down in the Gulf, for example, how that may impact, again, freight values, that type of thing. But point being is export demand is not really strong today. Our next section is the ethanol, a big factor here obviously in Illinois, all across the Midwest. Ethanol margins have really backed off. They're still positive, but they really backed off. Ethanol prices have backed off quite a bit from where they were this spring. So they're still making money, but we're not seeing the profitability that we saw, for example, earlier in 2015 and particularly in 2014. So what's that mean down the road? I'm not sure I can say a whole lot other than the fact that they're still making money, the production is still above last year. But as you go forward, economics will dictate what that number works at. And today we're seeing that number back off a little bit from where it had been earlier this summer especially. Wrapping things up on corn, feed residual. Our animal numbers are higher, okay, our usage is higher. USDA came out and said for the first 9 months of the crop year, our usage is up about 3% from last year in terms of disappearance. That's consumption basically by livestock and poultry. Our numbers are higher. Poultry numbers are forecast to be record high. This is still a big deal. Bird flu is still a wild card. For the time being, it sounds like it's more under control than it was earlier this spring, but when I was down in South Carolina speaking to the group, they really got the heads up in terms of taking precautions against that when they saw what happened, for example, in Iowa and Minnesota, the unfortunate situation that developed there where we had to see whole operations liquidated. That was a very difficult situation. But for the time being, I'd say decent prospects for feed consumption. Not record high, but pretty decent. A final comment on corn is look at the trend in export. You look at the trend in ending stocks for guidance. And when we saw corn go to all-time highs, the trend in ending stocks was 800 million bushels. This is the end of the 12-13 crop year. So basically 2 years ago, September 1st of 2013, only 800 million bushels were left in the bin, okay? On this date a year ago, that number increased 50%. It might not have felt that way because we were literally empty again because the harvest started a little bit later. But my point is, on paper, still throughout the whole country, 50% higher. And again, today's number, I think it came out at 177 this morning, so this number will edge up a little bit. Another not quite 50% increase, so we've seen that pile of corn, if you will, increase, and we've seen the price come down. What's it look like for 15, 16? We've got our numbers penciled in here under different yield scenarios. USDA's number this morning, I think, was 173. So that's pretty close to what it was this year, more of a stable. Not a big drop, but not a big increase. That can change, again, moving forward. But I think the big factor the markets will get its arms around here the next 30 to 60 days is how big our crop is. Is it going to be a 168 national yield? Is it going to be 170? Is it going to be 166?
There's only one way to find out, and that's to let the combines go. So, just a final thought on price volatility. This slide just looks at the calendar year high, calendar year low in nearby corn futures. You can see how much that volatility has increased the last 5-6 years. $2, $3, $3.50. That's the range in high price and the low price for nearby corn futures throughout the year. So far this year, it's only been 92 cents. And pretty much that happened from mid-June to mid-July. But my point being is that there's still room for change in that high and low these last 4 or 5 months of the year, calendar year. Again, the last 14 years, this average range has been about $2. The last 5 years, closer to $2.75. So this just shows what happens from mid-June. In that December corn futures, we've seen a tremendous amount of volatility over the years as we get into the weather season, right? What about this year? This year, here we go again. 360 up to 450, back down to 360. With today's 25-cent decline, this would be back down to pretty much right here. Didn't have time to update that, but here we go again. Volatility, swings in the market. So, a few thoughts on beans, and I'll let you folks get into your lunch hour here. The bean crop perception has always been a little bit weaker than corn for this 15 crop, but it's stabilized. And we've seen the last couple weeks, again, similar to corn, how that index has stabilized. Again, far below what it was last year in the orange line, but not the type of deterioration that we saw in 2012 when we took beans to nearly $18 bushel, right? So the market's perception, the USDA came out this morning at 3.9 billion bushel. That's just a smidgen below last year's record crop. So some of the same exercises we can do for corn, we do for beans. The big thing about beans is they've had record crops in South America now, again, this year. And we're looking at September 1 stocks in South America up over 500 million bushels from where it was last year. And we're going to see the ramifications of that in a minute in terms of our export program this fall. It's a big deal. Some other areas, we're seeing growing protein demand in Asia, record exports, imports. USDA did bump up the Chinese imports this morning. I did see that before I left. And a little smaller rapeseed crop in parts of Europe. The export picture for beans has been very bullish from a producer standpoint. If you look at that historically, it's been linked directly to what's going on in China. When we've seen Chinese, basically protein usage, as the Chinese economy has recorded those 8%, 9% GDP increases, the Chinese consumer has finally realized something that you and I and all our ancestors have known for a long time. That's a protein diet. Tastes good. Their meat consumption has increased. China can grow enough wheat. China can grow enough corn to feed themselves. They can't grow enough beans. So what they did was they built crushing plants. They imported U.S. beans. They imported South American beans a lot. And this is the increase in the protein consumption in terms of soybean meal the last 10 years. If you quantify that, that's a huge increase in terms of meal consumption and a huge increase in terms of soybean exports, okay, from the U.S. Now, the other thing that $18 beans did a couple years ago was motivate South America to grow more beans. What this slide looks at is world soybean production. I'm going to focus on the green bars here. Okay, that's Brazil production. And the blue bar is Argentina production. You can go back 15 years, maybe to 2000. Look at where those numbers are. Continues to grow, and then look at from 2012, or 11 to 12, how much it ramped up again. It's more stable this year compared to a year ago, but on the heels of these record crops, back-to-back record crops, that September 1 stocks level is a big deal in terms of how many bushels they have to compete with U.S. bushels in the world market. Let's quantify that. When we look at export sales, we can do the same exercise we did for corn for beans. We can look at what the USDA is reporting in terms of how many sales we made for old crop, how many sales we got in the books for new crop. Compare that with where we are usually this time of year. It's not a pretty picture for beans. This book for new crop beans, you have to go all the way back to 2009. That's a 6-year low. This book that we saw these last several years was typically characterized by sales to China. China's sales, and again, with the market collapsing 50 cents today, they look pretty smart. They've been very patient. Our book to China is way down this year, okay, way down. So what's this going to have an impact on in terms of what you folks are thinking about? What I would say is the export picture for corn were highlighted was weaker than last year. The export picture for beans could be significantly weaker than last year. For example, last fall I went back and looked. There were either 3 weeks or 3 out of 4 weeks we had liftings of beans of 100 million bushels. Now, most of that came out of the Gulf. Some of it came out of the PNW. This week, with this picture today, I cannot give you that type of forecast. I think that's going to be scaled back. Okay, scaled back maybe to the tune of 10 to 15 million bushels lower than that. We're still going to have it. I don't want to just write it off. China's still going to come in here and buy some beans. But it doesn't today look like we're going to have a strong program as we did a year ago. We'll wrap things up on beans and just talk about the carry-out stocks on beans. A year ago at this time, pretty much there was no beans left in the United States. The carry-out, the USDA said, was 92 million bushels. Those of you who think back maybe to what the bean situation looked like, there was no beans left by about the 15th of September, 92 million bushels. This year, 206, I think the USDA came out this morning at 240, so we're going to see that number go from 90 million bushels to 240. We still had double-digit bean prices last summer. That's kind of a distant memory now, but we actually had that transition from old crop to new crop was pretty chaotic last year. What about the 15-16 year? USDA came out this morning at 470. That's our high end today, but going from 90 million bushels last year, okay, to 240 this year, to maybe 470 for a year from now, you can see how the bean market feels heavy. And I think the price volatility that we've seen for beans is similar to what we saw in corn. The last few years, we quantify that. $5 has been the average range the last couple of years, okay? This year, only $1.40 so far. I think there's still room for that number to increase, maybe higher or lower, or both, depending on what happens here with our yields and maybe what happens down in South America. So I want to wrap things up. I appreciate you folks' patience today. Diverging weather trends have really resulted in strong regionality in supply storage space. I think we're going to see some things potentially develop here as you get into harvest, depending on how big the Illinois and Indiana, Ohio crops especially are, where maybe some things move from west to east. We'll just have to see how that transpires. A lot of export competition, particularly from South America in the moment. That could influence our programs this fall to be weaker than a year ago. And a lot of potential for cash market volatility, not only in basis, but also in freight values here moving into fall. So, Mark, John, that's all I've got. But if you have any questions, I'd be happy to field any questions now. So, yes, Carl. You know, it's a good question, Carl. We were just talking about that. I think this year is going to be, you know, typically in central Illinois, we'll see that Labor Day harvest. We didn't see much last year. I think last year's was pushed back. It got so cool in the summertime. This year, I think the thing that could hold that back would be the unevenness of the crop, the variability in the crop. I continue to see, I was at the county fair last week, so uneven this year's crop. Parts of the field will be ready by Labor Day. Parts of the same field won't be ready for weeks after that. So I'd say, if I was guessing, Carl, it might be just a tad of harvest maybe, and looking today at growing degree days. We are actually above normal for the crop that didn't get drowned out in terms of growing degree days. So we could see some of that corn in small percentages be ready right after Labor Day, mid-September. I don't see a wholesale harvest early this year. I think it's going to be drawn out, for lack of a better word. Just so much unevenness and variability this year. That's a good question, though, Carl. This is a year that feels a lot different than normal in so many ways. So. Yes, sir. Anytime you talk about politics in South America, it's a volatile situation, that's for sure. What I would say is this. The last couple years, the Brazilian producer and the Brazilian exporter has responded to the market. If that is allowed to continue, then I think the 2015-16 year could be unprecedented competition for U.S. corn and beans from South America. Unprecedented competition because of the size of the crops they harvested. Again, you get into some politics there, a lot can change, but all else being equal, just for the time being, set that aside, the volume of production, folks, that they have right now is something that we've never really seen before, and hopefully we won't see from a producer standpoint, U.S. producer again. The best answer I can give you today is I think they're going to be an exceptionally strong competitor at least the first half of this crop year, and then the second half of the crop year will be directly tied to things like election and then what their crop looks like for 16. The crop they'll plant this fall and they'll harvest next spring. But it's something that really it was interesting. It's only been 3 years. It seems like a long time ago. But the seeds that are planted with $8 corn and $18 beans have long-term ramifications. And this is one that has just continued to play out 3 years later with production increases, new acreage coming into production down there. The double crop corn that they plant in Brazil, I'm getting off on a tangent here. You folks are probably getting hungry. Just one thought. Brazil has always been thought about with soybeans. What's happened in Brazil the last couple years is their largest producing state is Mato Grosso, and they harvest soybeans there about the 1st of February. What they've done with the carrot out there of high corn prices, at least back in 13 and 14, a carrot of corn prices being up here, they double crop corn after their beans. They would harvest their beans in February and go out and double crop corn, and then they've gotten fortunate that the rainy season has lasted longer than normal. They've harvested record double crop corn acres in Brazil each of the last 3 years. So it's something we had not had to deal with, but when the Brazilian producer looked at even $6 corn, they said, I'm going to take a chance. I'm going to go out and harvest my beans, and I'm going to take a chance and plant more corn. And then they get favorable weather, and the rest is history. So, long answer to a good question. So, any other questions or thoughts? Thanks again for your time, folks. Best wishes for your rest of your day here, too.